Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny. And holy crap, Alibaba, a favorite stock of ours, talked about by Charlie Munger and Michael Burry recently. Well, not talked about, but bought. We're going to talk about the most recent quarterly earnings. Should we be really excited, or is it time to just abandon ship and sell? I don't know.
Two Super Guys Trade Stocks.
Yeah.
Oh,
So, I mean, the major news this week before earnings was about Charlie Munger saying that this was one of the big mistake for him buying it. We did a separate video about that. But really, was it a mistake? Did the earnings support that conclusion? I
I
don't know.
just to be clear, I think he was more saying it's a mistake for how much he went in, not he regrets going in.
Okay. That is one way to interpret it. So, the initial reaction was pretty positive, right? The 6% up, pre-market basically. Nice pop right after earnings. In terms of the actual kind of reaction there from that point forward, this is like a daily chart here. So we had that big pop up before pre-market here, up to $100 a share, and just kind of a slow bleed off, and then stabilize somewhere in the mid 90s for like the rest of the day. Not exactly what hope. The market was not in a good mood. It was overall not a great market day, so like that could
Market
certainly
was
influence
rough.
it.
Yeah,
Yeah.
that did not help. That it was actually it was a pretty bad day in the market, and you had really good stuff and news for one stock, but the weight of the market dragged. Was it dragged all boats? Ocean kills boats. What is it? It's something like that. The ocean murders the boats. That's it.
Yes, that's pretty much what it is. Yeah. This is a 5-day chart. Kind of same thing. You can see it a little bit more clearly here because you got the big pop up and then just kind of consistent bled that back down. Still stabilizing around this $95 region. And we've been in a little bit of downward trend over the last, few weeks. The headline numbers here, this actually I think came from Market Watch. I can't remember exactly where I got this article from, but I wanted to compare it to analyst estimates, and that's where you get this from. And basically, you're looking at a beat on both revenue and on EPS is what the kind of punchline is from this particular segment here, right? The revenue up 2% year over year, and the actual, the earnings up 14% year over year. Now, they just had a big write down in goodwill last year, so it's not exactly like a comparable quarters in terms of that, but still a positive trend we'd like to see. From
Okay.
their standpoint, this is from like their actual presentation here or press release, if you will. A couple of kind of things that are important here, at least to me, was that the CEO saying we delivered a solid quarter, despite the fact that we were just opening up in China from the kind of COVID lockdowns, and the CFO was really kind of focused on both cost efficiency and also returning capital to shareholders. Only 3.3 billion in share buybacks this quarter, which is a little bit disappointing, but we'll talk a little bit more about that as we go through.
That is disappointing. I would
Yeah,
have went ham on that. Yeah, geez.
especially when you consider comparisons to this year. So this is the thing that I personally try to pay attention to the most when I'm looking at a stock is what their free cash flow is, right? So free cash flow this quarter for Alibaba was $11.8 billion right here. That's a pretty sexy number. 15% increase over the same quarter from 2021.
Yeah, but that's just because they didn't spend any on share buybacks.
Well, they did. That is the money that ultimately goes to share buybacks. If you think about it, so of that 11.8, they use 3.3 billion down here for share buybacks, which is good, but you're still deploying like 25% or somewhere in that ballpark of
Yeah.
it. Now, there is the ability to do share buybacks in China is much more complicated in the United States in terms of when they are allowed to do it and how much they're allowed to do it. They're always allowed to buy back stock-based compensation, which is about 1.2 billion, I think, this quarter. So they exceeded that by a couple $1 billion, but they really have strict rules about like how aggressive they can be with share buybacks, which is one of the things that I think is causing Alibaba stock to kind of languish a little bit more than we would see, like, say Meta, for instance, had a pretty dramatic sell off, but they also had a really profound rebound. We won't see that with these Chinese equities because the restrictions on that capital deployment. When you're looking at a segment by segment breakdown here, this is kind of what it was being expected. That's what Dylan had asked me. So, what do you think of the quarter? I'm like, it's about what I would expected here. So the Chinese commerce down a little bit. And when you look at the kind of quarter compared to last year, the actually having some pretty solid gains amongst their international commerce and the Kinao, their logistics kind of arm. Now, both of these are relatively small when you look at the actual amount of revenue here compared to the China commerce. China commerce is by far and away their bread and butter, but it's nice to see that they have other segments that are growing and it will hopefully offset some of the, kind of losses are size here in terms of the overall revenue or the China commerce revenue, and also in terms of like profitability, right?
There's you'll like this. I contributed to Alibaba's sales this year.
Yeah.
I don't
Oh,
know the
nice.
name of the site, but they order through Alibaba. There's like 100 onesies for babies.
That's great. They're probably so cheap that they're disposable. The trade off is
They're
that
very cheap. They're stupid cheap.
you can see right through it.
And
um,
I didn't do it. My wife did, and then told me later. I was like, "Oh, that's the stock I'm in." That, by the way. She's
yeah,
like, "Oh, okay."
I love it. That's awesome. So, one of the things that's been pretty disappointing is cloud, and they actually addressed that a little bit in the conference call. So we're going to talk about that a little bit later on too. But I'm optimistic about what I heard. Put it that way. So this thing right here is looking at the China commerce. The reason why I left this slide in here was to show kind of their internal cannibalism a little bit, if you will. If you notice this, there's two segments of the China commerce: this customer management and direct sales and others. And if you come over here to the side, you can kind of see year-over-year change. So direct sales has grown by 10%, while the customer management revenue has come down by 9%. This is where we were talking about the internal cannibalism, where they become much more of the direct seller as opposed to the platform. So it's got lower margin business, but this is because they acquired a lot of grocery vendors and that sort of thing. So they're selling a lot more, volume stuff themselves directly.
Okay. All right.
You know,
That's the retail part that Munger did not like.
yeah, and this is something we knew and expected. So I don't think it was a curveball at all. Trend is going to continue for a while. Um, Now, the big thing I wanted to highlight from this slide here, looking at this is kind of cost of doing business, right? The different segments that they have expenses. If you look at it, total cost of expenses down 11% in terms of share of revenue over the year, which is good. Like their cost control measures are good. This impairment of goodwill was a large one-time write-down in value of assets, but overall they're keeping their kind of expenses in check, which is what you'd really hope to see. It's been a theme for most major tech companies in the U.S. and abroad, right? They're trying to control their
Yeah.
cost measure.
Yeah, absolutely. Especially when you had 2020 is just like an insane year of, they're not matching those numbers. It's not really realistic. But yeah, operating
Exactly.
margin, baby.
Yeah, well, exactly. The kind of demand went up so quickly, the companies had to spool up very, very quickly or to accommodate that, and they kind of overshot it towards the upside, where they
Yep.
they really had acquired more employees and were overexpanding their footprint very aggressively, and now they have had to tailor that back a little bit, and they're doing what seems like a prudent job. That's kind of what I gathered from listening to Toby talk in the conference call. Now, this is a nice thing. Can you imagine seeing that number in your checking account if you had $78 billion in cash sitting in a checking account? That's
That's
what
how
they
much
have.
they have.
Yeah, that's their cash and cash
That's
equivalents
a
is
lot.
78 billion USD.
Jeez.
Yeah,
Okay.
yeah.
That's a
I'm
bunch.
gonna do a little fun with numbers slide here in a minute to
All
kind of
right.
talk about how ridiculous that is.
It's titillating.
It is. And then, net cash from operating activities, you're looking at 12.6 billion. Like once again, you're looking at that actual free cash flow of 11.8 billion, up 15% over year, which is great. That's a fantastic number. That makes, a 15% growth in free cash flow in a year is enough to make me have at least like a half erection.
That's called a chub.
Yeah, sure. Whatever you want to call it.
Um,
Alibaba chub.
did it get into cloud performance at all?
Yeah.
Got it. Okay.
Uh,
All right. Jumping ahead.
so yeah. I want to talk about the comments about it because I think it's gonna be interesting going forward. I'll save it for a second here. All right. So when you talk about kind of covering here or controlling, look, they actually shed over 4,000 employees in the last 3 months. Basically, they didn't really formally announce like major layoffs like that, but this is the cost control kind of measurement moving forward, right?
Yeah, and that's huge. That's why companies kind of really get screwed. You get big and bloated, and then you have these acquisitions. They're buying all these grocery stores and all that crap. It can really get out of hand. Intel's probably the greatest example of that.
Oh, Intel. It's like the punching bag of the stock world right now.
And
The
Nikola.
The kind of interesting thing I took from this is when you're looking at, the kind of free cash from this last quarter, it really accelerated compared to the rest of the 9 months that ended before that, December 2021. You're talking about 20 billion as opposed to 11.8. So it's like a real like acceleration in free cash flow. So it's not exactly fair, but I wanted to take this number and play a little around with it to show you how ridiculously large this number
Oh,
is compared
jeez.
to
Okay.
the valuation here. Um, so this is my fun with numbers, right? So Alibaba, $250 billion market cap, $78 billion in cash and cash equivalents. That's not their net cash position, which would probably been a little bit more fair to use that. It's up to 65 billion or something like that. But still, whatever. It's my presentation. I can do it the hell I want. So 250 minus that 78 gives me 172. That 11.8 billion, if you annualize that rate out, that's $47 billion of free cash flow a year, which
That's
is
not gonna
ridiculous.
happen.
I agree. It's not going to happen. But if that were to be the case, it'd be like a 27% yield to show you how ridiculous that number was. The
Yeah, no, it's definitely a really good quarter. I don't know if it's 27% good, but
Yeah, I completely agree. But I'm just telling you, like my point with throwing this thing together is like the Wall Street reaction makes like zero sense.
If anyone thinks the Wall Street reaction to this makes zero sense, watch our NVIDIA video that should be coming out after this. Also makes zero sense.
Okay, I like it. So these are a couple like things I want to talk about from the conference call. So Alibaba, I forget exactly the name of is it Tren Yao is they're one of their international commerce kind of major kind of players is actually in Turkey, and as you may have seen in the news, they had a pretty severe earthquake there. They didn't exactly say that they were not impacted at all, but it said like all their employees had survived, and that like they were operating kind of in a so what I want to say here that helping aid transition like kind of aid resources. So they had transitioned, I guess, their role there a little bit, but it didn't really say how much their business had been impacted. That was like, it's still very very small comparison, but like I would have liked if they had said that like our operations are still fully intact and we're serving in this additional mission here. But I didn't like exactly what that was explained.
It might be hard for them to know yet because it's still pretty early in that process. Because they had
Yeah.
two, so
Yeah, very good point. So this is the thing about cloud that I want to talk about. Their cloud is definitely languished. You've heard me talk about it before. 3% growth, and they were talking about giving like 40% growth projections to 2025 for the whole cloud segment, and they haven't been as angry about it as I would have thought. One of the other things they talked about too is obviously they had this whole loss of probably ByteDance, the whole TikTok thing, and that gave them some headwinds. So that was a issue for a while, but from the kind of what they said, it sounds like they've moved past that, but they're still not growing the way they really should. They talk about how we're growing in non-internet based companies and that sort of stuff, but still, it should be better, right?
yep.
Very disappointing. Um, Daniel Zhang, the CEO of Alibaba, said he actually is now taking over the role as president of Alibaba Cloud specifically too, and then he talked a lot about a cloud and it being a source of kind of the aspirations and his goal for this year is really to be focusing on the cloud aspect of the business is what I gathered from what he talked about in the conference call. So that's something I'm happy to see because that is a wider margin business and they have really underperformed in that realm.
I remember previously you had shown what their goal was from 2020 to 2025 through cloud, and they are nowhere near it right now. They are
Mhm.
falling short for sure.
Yes. Completely agreed. Completely agreed. And this is definitely something they should be taking a task for because they have grossly underperformed in the cloud arena. But it looks like they're trying to make some steps to kind of move forward with that. And we'll have to continue to monitor this over the next few quarters and see if Daniel Zhang, being now also the president of Alibaba Cloud, can actually have a positive impact there. Now, you hear these companies talk about like a theme word for the year. The kind of efficiency was the big one with Meta, right? I know, but I get it. You should be doing multiple things at the same time. But their kind of theme word for this year was not efficiency, but progress, is what Daniel Zhang called
I
out.
mean, they're pretty efficient. They're not. I mean, in terms of companies this large with 250,000 employees, they're doing pretty solid efficiency rise. It's growth that they're not doing as much as you would like. So
Yeah, yeah, I completely agree. The cloud issues have been a problem. The China revenue itself, as far as China commerce, has been a problem. Now, he was kind of vague on this. He said that they see a lot of opportunity, and that's why they're retaining a lot of cash in order to be able to take full advantage of these opportunities. Like I said, they got the $78 billion in terms of where they're going to look to invest over the the coming kind of year. But that was more his thought process. It's interesting though with China reopening. I'd imagine that there can be some pretty rapid shifts in the way of consumer behavior, so that'll be part of it, and hoping to kind of position themselves to take full advantage of that. And I want to say too, like I really like the CFO Toby Zhu. He really definitely he's the guy who's responsible for that $11.8 billion of free cash flow. I want to say he
Yeah.
recently stepped up and took the role, so it's kind of new to this, but he's definitely driving the kind of efficiency for the business down to a finer point is my perception of him. Listen to him talk on the conference call.
All right. I mean, that's all pretty solid news. The Obama did not perform as we would have hoped. Once again, it's not really fair because the market was kind of taking a shit. But I do think this upcoming year could be pretty huge. Hopefully, Charlie Munger doubles down, and that was just he do like full margin, goes full margin down on it, and just he's like, I'm 99. What's the worst that can happen? That'd be dope.
Yeah, yeah, no, I love it. I'm actually okay with the stock languishing because that means that is more time where they can chew up these shares, even at this kind of $3, $4, $5 billion, hopefully a quarter. That's something I'd love to see as a shareholder if I'm really investing in the long term, which is always my perspective.
All right, guys. Let us know how if you're in it, if you're not in it, if you're depressed or you're happy. All right, have a good one.
Catch you next one.